Have you noticed this really weird thing happening in crypto lately? On the one hand, we're getting all this insane, game-changing news. But on the other hand, the prices, they're just stuck. Today, we're going to dig into this huge disconnect and try to answer a simple question.
I mean, seriously, it's the question on everybody's mind, right? You look at the fundamental picture and everything seems absolutely perfect. But then you pull up the price charts and they're telling a completely different story. So what is actually going on here?
You know, the source material for this explainer just nails it with this quote. The storm is perfect, the stars are all aligned, and yet the asset prices are not moving. It's a total paradox. So let's try to unravel it. And we'll start with all the good news, the bull case.
All right, so let's kick things off with the bullish side of the coin. The news coming from the big institutions, well, it's been absolutely game-changing. And I'm not talking about some minor announcements here. We're talking about seismic shifts in the world of finance. So, what's got everyone so hyped up? Well, it starts with this group called the DTCC. Now, you might not have heard of them, but just think of them as the absolute backbone, the central nervous system for the entire $100 trillion US stock market. They handle pretty much every stock trade settlement, and they just made a massive move.
That here it is, the bombshell. The SEC just gave them the green light to put stocks on the blockchain. Let that sink in for a second. The implications here are just huge. Imagine taking your Tesla stock, turning it into a token, putting it in your crypto wallet, and then using it as collateral in DeFi. This isn't some far-off sci-fi dream. The framework for this is being built right now.
Yeah, the source doesn't pull any punches on this one. This is a huge, foundational step toward merging Wall Street and crypto. And yet, the market barely even blinked. Crazy, right?
And the news just keeps on coming. You've got Bank of America, one of the biggest banks out there, now offering Bitcoin-backed credit, treating it as a legitimate asset for collateral. Then you have Coinbase getting ready to launch its own tokenized stocks. These are massive validation signals from the biggest players in the game.
As the source sarcastically puts it, it's probably nothing, right? All this revolutionary stuff is happening, but something is clearly holding prices down. And that brings us to the other side of the story.
Okay, so if the fundamental news is so incredibly strong, what's the holdup? Well, according to the source, the answer isn't in the news, it's in the charts. We have to look at the technicals. And right now, Bitcoin is facing what you could call a final boss battle that could define the market for months to come.
And this whole fight, it all comes down to one single line on the chart, the 50-week exponential moving average. The best way to think about it is as a huge dividing line. If the price is above it, historically, that's bull market territory. But if it's trading below, well, that usually means the bears are still running the show.
And right now, there are really only two ways this can go. If Bitcoin can punch through that critical line and hold above it, a lot of the bearish arguments just kind of fall apart. But if it gets rejected there, the source calls it a kiss of death, a really bad sign that could mean new lows are on the way.
Now, if you want to see this whole conflict, great fundamentals versus a tough market, play out in real time, the source points to a perfect example: Solana. It's a fantastic case study of a project with incredible underlying strength stuck in a really choppy market.
First off, just look at the tech. With its recent Fire Dancer upgrade, Solana is now capable of 1 million transactions per second. 1 million. That's not just a small step up. That's a quantum leap in performance that puts it way, way ahead of most other chains.
And it's not just about speed. The institutional adoption is very real. The co-founder of Circle, the company behind the USDC stablecoin, says Solana now dominates in volume. You've even got giants like JP Morgan using its network to issue debt on-chain. That is the kind of serious validation that builds an ecosystem for the long haul. And with all that fundamental power, you start hearing some pretty big price targets. One that keeps popping up, especially from people like Anthony Scaramucci, is $1,000 Solana. Given the momentum, the source sees a clear path to that kind of valuation in the next bull cycle, even if the current price doesn't reflect it at all.
So how do we resolve this? How do you make sense of amazing fundamentals on one side and kind of bearish technicals on the other? Well, the source suggests the answer is to just zoom out and look at the bigger picture, because a truly historic shift is happening right under our noses.
We're watching a fundamental change in who actually owns crypto. The early retail pioneers, the OGs, are moving on, and a completely new class of huge institutional investors is stepping in to take their place. This isn't a minor shuffle. It's a full-on changing of the guard.
The source calls this the Great Baton Pass. Think of it like a relay race. On one side, you have the early investors cashing out their life-changing gains. They're passing the baton to the institutions who are just hoovering up everything they can through ETFs. This creates what Anthony Scaramucci calls a permanent wall of buyers and sets the stage for the next leg of growth, from maybe $2 trillion to $20 trillion.
So, when you boil it all down, the market is caught in a massive tug of war. It's being pulled in two completely different directions at the same time. And to make sense of what's happening, you really have to understand both of these powerful forces.
It's simple, really. In the short term, the technical picture looks, well, pretty grim, with that major resistance overhead. But in the long term, the macro fundamentals look incredibly optimistic, with unprecedented institutional adoption. The entire market is just caught between these two realities.
And that leaves us with the final, all-important question. When the short-term charts are screaming caution, but the long-term fundamentals are screaming opportunity, what's the right move? The source seems to suggest that the winning strategy might just be patience. But what do you think wins out in the end? The scary chart or the bullish fundamentals? Thanks for joining us.